So we all remember what the crash in the US looked like back in 2008. Homes that doubled in price in a few short years, suddenly worth half of that. And for years, we've told ourselves that could never happen right here in Canada, especially not in Ottawa. But economists are now warning that what's unfolding here looks a lot more like 2008 US than any normal housing slowdown we've seen before. My name is Liam Swords. I make videos about living in Ottawa. I'm also a top producing realtor helping people just like you make Ottawa your home. I've got an article right here from BMO's Capital Markets, and it's making waves. It's literally titled, "Canadian Real Estate Resembles the US Bubble After the Perfect Storm." It's not from a blogger or a YouTuber. This is one of Canada's largest banks saying the country's housing bubble, including Ottawa, may already be deflating. Let's break it down and see what this actually means for Ottawa homeowners and buyers. The article starts with BMO's Capital Market warns that home prices have been sliding for 3 years, and the current decline more closely resembles the US housing crash in 2007-2008 than the 1990s Ontario correction. Not exactly the headline you want to read if you just bought a home. They say Canada, and Ontario in particular, is heading for a long, drawn-out recovery, cautioning that it's almost impossible to recreate the conditions that fueled the boom from 2016 to 2021. Now, I get it. We've all heard crash predictions before, and it's like clickbait out there. That's not my intention in putting this out. My whole point is this was an article that's circulating a lot. I'm being sent this article by clients of mine, and I did want to give you my opinion and my take on it from a guy that's into the trenches doing deals every single week and what I am seeing in the Ottawa market. But it's important to note BMO is coming out because they are concerned with what they're seeing. If they're publicly saying that the bubble is already deflating, it means that they're seeing the numbers shift behind the scenes and planning for slower years ahead. Like the big banks have tons and tons of economists looking at all of this. They're hedging their bet. They're lending money, 3-year term, 5-year term, lots of risk in that. So they are like predicting the future almost for us. And that's why we need to be really cautious and aware that if BMO's coming out with a report like this, we need to be ready to react as something is brewing. What they're really saying in this article is we're in a correction, and Canada's in the correction, and so is Ottawa. This will not wrap up in the springtime of 2026. We're in a multi-year adjustment phase. BMO showed this chart here comparing 3 different cycles. So Ontario in the 90s, and then the US in around 2007, 2008, and then our current Ottawa market. And right now, Ottawa price curve tracks much closer to the 2007, 2008 US path than most people actually realize. Remember, Ottawa's market peaked in March of 2022. This was like the COVID days. It was crazy market, seller's market. Nothing was on the market. Buyers were just flocking to property, paying 10, 15, 20% above market value with no condition. Absolute chaos. Now, we never really want to get back to that because that was not a good time. Sure, it was great for sellers, but most people were buying in that same market. So it's all relative. Yes, you might have hit the grand slam when you sold, but you're buying in this market. You were buying property without actually having conditions on it. Like, think about that. Hundreds of thousands of dollars, almost $1 million properties without any conditions. Zero recourse, contractual agreement, signing off on it. We never want to go back to those days. The difference is though, instead of a crash overnight, Ottawa's market is slowing down and it's deflating. Affordability here has hit record lows. Even though income in Ottawa are relatively strong, the average detached homes still cost more than 6 times the median household income. I want to repeat that. Households in Ottawa, detached homes still cost more than 6 times the median household income. Think about that. It's bonkers. So yes, it's stable, but it's a stretch. And that's the dynamic the economists at BMO and other banks are worried about. When prices plateau at unaffordable levels, it doesn't take much, like a rate spike, a job loss, or a supply surge to knock things down another notch. To summarize in the article, they're talking about the perfect storm that lifted prices from 2019 up to 22 cannot be repeated. That means that the next 5 years will likely look nothing like the last 5 years, which I think kind of makes sense. I think we can all agree. None of us want to see COVID come back. But how does that actually play into the Ottawa real estate market? Well, according to the Ottawa Real Estate Board, the latest numbers for September 2025 saw 1,089 homes sold in September, down from 1,236 in August and down again from 1,300 in July. The average prices came in at 699,000, almost flat year over year. Active listings climbed to 4,388, the highest number of listings since 2019. Another signal for us. So prices aren't crashing, but demand has clearly cooled. The supply keeps going up. That's what a slow deflation looks like. Not a pandemic, just a steady return to reality. And here's where Ottawa actually stands out from the rest of the country. We're not in a buyer's market. We're not in a seller's market either. We are in a balanced market, sitting at roughly 4 months of active inventory. So to put this in perspective for you, if no new homes came up for sale, it would take about 4 months to sell everything that's currently listed. Under 3 months is a seller's market, and over 6 months is a buyer's market. So 4 months, that's right, we're right in the middle. It means buyers finally have room to negotiate again, to include inspections, financing clauses, even first refusal conditions, meaning the seller has to sell their property. This is the healthiest, most normal balance Ottawa has seen since before pandemic. No bidding wars, no 20 offers in one night, just a calm, more predictable market. Now, even with that balance, the banks are still cautious. If BMO and other lenders believe prices could soften further, they tighten lending. That means tougher qualifications, smaller loan amounts, and stricter debt to service ratios. They're asking themselves, if I approve this mortgage today and the market dips another 5 or 10%, what happens to our risk 5 years from now? So don't expect banks to loosen up quickly, even if the Bank of Canada continues to cut rates. They're playing defense right now, and they're watching this long-term unfold. They're lending today, but they're giving a commitment for 3 to 5 years. The banks have to be cautious, and we're seeing it right now in this article. If you bought in 2021 or in 2022, you're not alone in feeling the squeeze. Renewals are painful, but the key is to focus on staying power. If you can hold through the next few years, Ottawa's fundamentals, stable government jobs, population growth, and balanced supply still make it one of the most resilient markets in Canada. And if you're buying right now, think long-term. Don't buy to flip, but buy because it's the right home for you and your family for the next 5 to 10 years. That's the kind of mindset that gets you through cycles like we're in right now. So, is Ottawa following the same script as the 2007, 2008 US crash? Maybe not exactly, but the early chapters look familiar. The difference is Ottawa's moving through it with a lot more stability. We're balanced, we're cooling, and we're finding our footing again. I want to know what you're thinking. Are you seeing prices soften in your neighborhood? Do you think Ottawa will hold the line, or is there more to come? See, Ottawa's made up of micro neighborhoods. So what are you seeing in your pocket right now? Drop your thoughts below. I read every comment and reply. I'd love to hear from you. And if you're curious where Ottawa's market is headed next, be sure to check out my video right here, where I have my 2026 housing forecast. I break down everything, what's coming down the line, and what it means for buyers and sellers. Watch it right here.